Hello family, Sir here, and in this video we are going to do a deep dive and talk about all things credit. We are going to address some of the questions I commonly get, such as what is your credit score, what makes up your credit score, and how you can improve your credit score so it's above a 750. If you're new to the channel, welcome. I am Sir Ashley. I am a non-practicing attorney and a full-time real estate investor and a licensed realtor in both North Carolina and South Carolina. And today I am very, very excited to talk to you about credit because it is one of the most important things that we overlook. Learning how to play the game of money and credit isn't something that I was taught growing up. Although I was not taught about it growing up, I had some excellent mentors both in college and in law school and continued on as a young adult. And I want to share with you some of the insight that I have been given. On this channel, we talk about money, real estate, and all things Charlotte. So if you're interested in any one of those things, go ahead and hit that subscribe button and also hit that bell icon so you can be alerted for when we drop new videos. In all actuality, go ahead and hit that subscribe button because I know you're interested in money. This video is about credit. That's why you're here. And there will be a link to a credit playlist where I go over different hacks and tips regarding credit. Credit and money is something that I'm very passionate about and I enjoy sharing because too many people either don't have enough money or they have poor credit, not because they're lazy or dumb. It's simply because they were not taught the rules of money and credit. In a recent video, I did a deep dive on how to buy a house in 2021. And in that video, I talked about getting your credit score to at least a 620. I will link to that video in the description. Be sure to check that video out if you haven't. But let's get into a deep dive about credit so you can get your credit past a 620 and well beyond. Credit is so important, and good credit is necessary if you want to get a fair interest rate on a car loan, on a mortgage, or if you want to buy anything. And it's vitally important that you learn the credit game and how to play the credit game and position yourself to take advantage of the system. Because in order to fully maximize your earning potential, you need to learn this credit game because credit really does impact your day-to-day life. The first thing I think that is really important is to know what is your credit score. Now, in the past, I spoke to churches around Charlotte to educate their members on credit and financial literacy, and more times than not, people didn't know what their credit score was. Again, that's not a knock on them. It's just something they weren't taught, so how would they know? Well, there are three credit bureaus: Equifax, TransUnion, and Experian. And each of them are going to have a different score for you because all of them have their own calculation method, but generally, the three scores are within 15 to 20 points of each other, and lenders take the middle score as your credit score. Now, your Equifax score might be a 700, your TransUnion score might be a 690, and your Experian score might be a 705. Now, the lender will look at whatever the middle score is. So in that example, your credit score would be a 700. Now, credit card companies simply report your monthly balance and spending limit to the credit bureaus. And after analyzing all that data, the credit bureaus calculate your credit score. Credit bureaus look at 5 different categories when trying to determine your credit score. Now, credit scores range anywhere from 300 to 850. The 5 different criteria credit bureaus use in order to determine your credit score are: number 1, your payment history; number 2, your credit utilization or the amount owed; 3, the length of credit history; 4, your credit mix, whether or not you have installment loans or revolving loans. We'll get into that later. And number 5, new credit. I know this may seem like a lot of information to take in right now, and you might even start to feel a little overwhelmed. Trust me, I know how you feel. I felt overwhelmed when I first started learning about credit. But like anything in any other game, the more you learn about it, the more you study it, the more you put it into practice, the easier the game becomes and the better you get at it. So do not get discouraged. All right, the first criteria we are going to discuss is payment history because it has the largest impact on your credit score. Now, payment history actually makes up 35% of your overall credit score. And that makes sense because credit card companies and banks who are lending you money, of course, they want to see what kind of history you have regarding paying back that money because they're going to want their money back. In regards to line of credit, credit cards or car loans or mortgage loans, etc., you are going to have something called a statement date. And on that statement date, the credit card company wants you to make a payment. And usually a day or two after your statement date, the credit card company will send a report to the credit bureaus. Regarding each line of credit or credit card that you have, it's going to be a different statement date. Now, the credit cards are reporting to the credit bureaus. Now, they don't typically report that you're behind on your credit card payment or your loan payment until you're at least 30 days behind. But please, do not test them out. Just make sure you make your payments on or before that statement date. Now, that takes us to the second criteria in determining your credit score, and that is credit utilization. Credit utilization is simply the amount of revolving credit, such as credit cards, that you're using compared to the amount of credit you have. For a quick example, let's say you have a credit card limit of $10,000, but you have a credit card balance of $4,000. You are considered to then have a high credit utilization. And credit utilization makes up 30% of your entire credit score. For years, Americans have been taught to stay 30% or under regarding their credit card utilization. And while 30% utilization is better than having a 50% utilization or higher, a utilization of 30% will still negatively impact your credit, or at a very minimum, not allow you to see a very high credit score. And I'm talking about a score of 750 and beyond. You want your credit utilization to be around 2 to 5% to see the biggest jump in your credit score. Now, there are a couple ways to get your credit utilization down, and one way is to simply pay down some of your credit card balances, but another way is to simply get more credit. Now, you can do that through additional trade lines or credit lines and also being added as an authorized user. Be sure to subscribe to the channel and check out this credit playlist where I get into detail regarding some of these credit hacks. But back to where we were. The easiest way you can lower your credit utilization is by requesting a higher limit on the cards that you already have. But I caution you, if you know that your credit score is poor, do not ask for a higher limit because the inquiry will negatively impact your credit and you'll be denied. In my years of talking about and teaching about credit, I found out that many people think one of two things. First, people think, well, I'm not going to use any credit, and if I don't have cash, I'm not even going to worry about getting it. And the second thing a lot of people believe is that they should completely pay off their credit card balance every month so it can look good on their credit report. But for those people who are trying to increase their credit score to a 700 and above, and to do so in a relatively quickly time frame, those two train of thoughts are detrimental to your credit score improvement. I know this is contrary to Dave Ramsey, and I've taken his courses. You see his book in the background. And he and his team are very wise and provide valuable information. And his strategies do work, but they take much longer than they need to. Remember, credit and money is a game. And like any game, everyone has different strategies on how you should win the game. I'm not saying that his teachings are wrong. I am saying that you don't have to wait years, and that if you want to increase your credit score dramatically and quickly, I suggest you employing taking some of the options that I lay out here. Let's look at the first flawed train of thought. You know, the person that says, I'm not using any credit, and if I don't pay cash, I'm not buying it. Well, I already mentioned credit history and credit utilization make up 65% of your entire credit score. So if you don't use credit cards, your credit score will be awful simply because of that, because you've taken away the two main sources by which credit bureaus base your credit score. Yes, there are some ways around this, but we're not going to get into that during this general overview about credit. Now, let's address those people who believe that paying off their credit card balance every month is a good thing. Yes, paying your credit cards off every month is much better than having a high balance or high utilization. But when you completely pay off your credit cards every month, it looks like you didn't use any of your credit. So the credit bureaus don't even know that you're being a good steward of the credit you've been given, because all they see is that every time the credit card company reports a balance, it shows up as zero. So the hack to the credit utilization portion of the credit score formula is to make sure your credit utilization is around 2 to 5%, because that shows the credit bureaus that yes, you're using the credit cards and you're being responsible in your use, and you're not maxing out the cards or overutilizing them. Now, if you're like me and use credit cards for everything because you enjoy getting rewards and cash back, just make sure you have a way to remind yourself for every single card that your balances should be around 2 to 5% every single month that statement date is due. I understand that 2 to 5% utilization may be a bit difficult at first, but do what you can to make sure your utilization on each card is no more than 25% by their statement due date. Now, the last three categories I actually want to talk about together because they really do play off each other. And the last three categories are: one, the length of your credit history, that makes up 15% of your credit score; your credit mix, that makes up 10% of your credit score; and new credit, that makes up the final 10% of your credit score. If you are a new credit user, this is going to be very hard to score high in these three categories. But like any other game, there are hacks, so be sure to subscribe to the channel so you can be made aware of these hacks when I release new videos about them. Your credit history is just that. The credit bureaus look at how long you've had credit and look at the age of all your credit lines and trade lines. The older your account is, the more likely it is for you to score higher in this category. Credit bureaus like to see old accounts because it shows that you have a track record of being a diligent steward of the credit you've been given. That's why I advise people to start building their credit from a young age, even 15 or 16 years old. Now, you do not have to have a credit card at that age, but if your parents have a credit card and they've been responsible using their credit card, they can add you, or parents, you can add your kid as an authorized user so they can benefit from your credit history. Have you ever wondered how 21 or 22-year-old kids graduate school and buy a house? Yes, I understand they're adults at that age, but they're still very young, and they graduate school and buy a house. Well, I wondered that too, and one of the hacks that their parents implement is just that. They add their kids to their account early on to make sure that by the time their kids graduate college, their credit score is in the 700s at a minimum. Again, we are going to talk more about credit hacks in future videos. Now let's talk about credit mix. This just means having diversified types of credit, such as installment credit like car notes, student loans, mortgage payments, and revolving credit such as credit cards, gas cards, and stuff like that. Credit bureaus want to see that you have a well-rounded credit mix. If you have all student loan debt and no credit card debt, that doesn't look that good, and vice versa doesn't look well either. Credit bureaus want to see a balance. Lastly, there's new credit. Now, when determining your credit score, credit bureaus will be looking to see how many hard inquiries you have on your credit report. Now, usually when you apply for a credit card or apply for a loan, you will get a hard inquiry on your credit report. I encourage my students and mentees to only apply for loans and credit cards that you know you can get. Do your research beforehand before you apply, and by now you know your credit score, so after doing your research on the card, you know if you have a high likelihood to getting approved for it. My rule of thumb is if you apply for it, you better get approved, or otherwise you just cause a hard inquiry on your credit report for no good reason, and that could potentially harm your credit score. Now, in future videos, we will talk about credit cards and line of credit that you will 100% of the time get approved for. As a general rule of thumb, don't apply for credit more than 2 times a year. At max, 4 times a year. Now, this rule is general, and there are some exceptions depending on your specific circumstance. No matter where you are in your credit journey, I have tips and hacks that can help improve your credit score. Now, before I let you go, I'm not going to go in depth about this, but I need to say this because I had a conversation with 2 clients in the past, I would say 3 weeks. Do not, I repeat, do not pay off any judgments you may have on your credit report. I say that because it will end up harming your credit score more than it will help your credit score. Remember, money and credit is nothing more than a game, and once you know the rules of the game, you'll become better at the game. And once you learn the rules of the game, you'll then understand the exceptions to the rule, and you're on your way to mastering the game. I look forward to being part of your journey through this game. I hope this was helpful, and if you gained any insight or got any value from this video, be sure to comment on this video and hit that like button. I'm Sir Ashley. Talk soon.